One of the things I like to do is to try discretionary trading based on what I've learned over the years. Sometimes it's difficult to become profitable in that endeavor, but some of the things I've found lately that have worked on days when the systems don't take trades and it's kind of a boring day and you want to take advantage of profits. If you're a screen trader and have the time and the extra capital to test strategies, um, this is what I like to do. And I look for divergences in this kind of a market. It's Friday. We've had hard selling all week. Here's the Emini Russell over here on the right. And it's just on Monday we shot up, and the rest of the week we sold off. And a lot of talk about the market going down yesterday. Um, and this morning was a quiet market, so it's just kind of really flat. And one of the things you don't want to do usually is to short a dull market. And so there tends to be a tendency to for the market to go up when it's sold off, and then it's just flat lines. No one's selling it, and so we have this counter trend rally up to the 1,000 level. Um, and we have about 38 minutes left to trade for the day. I'm not going to take any more trades. There's a nice profits on this. Went long initially. Here I got one contract, or actually two contracts, then doubled down again on two. Got two more. So four contracts from this point. And as you know, the 8750s, the 9250s, those numbers can be support and resistance in the E-mini Russell. Tried this earlier, got stopped out. Tried it again, took a little profit, and then kept going. I just uh, watching the ticks as they sell off. You see this tick sell off here, 2 o'clock in the afternoon. A lot of times there's going to be a counter trend rally. It'll start at 2 o'clock Eastern or around that time after a tick sell off. So you see the tick sell off. Not a lot of selling. It's still holding this level right here. And so you have a tick reading near this previous low, but the market doesn't make it to that low, and so you've got this divergence. And so you kind of scale in here, and you can see a scale out. I sold two there, sold one there, and sold one there as the tick started pegging near 1,000. That tick high today is 988. So we'll see. It could pull back here, and it could be even a huge. It could have a huge rally uh, going into the close, or we could sell off, or we could just stay in here. I don't know. So I'm going to stay flat, but again, one of the techniques is to look for divergences on a slow day when the market sold off, and you have the opportunity to take, the counter trend rally because the selling is done. And so you don't want to catch a falling knife. You don't want to buy a market that's going straight down. But um, over here on the right, one of the things I also noticed, you had your 60-minute bars. The news this morning made that high, and then your 60-minute bars that didn't take out the previous high. And so the indexes, especially more than anything, will tend to destroy a trend, especially a slow trend like this that hasn't uh, taken a distinguishable strong move down. And so it didn't take a strong move down. All these bars are overlapping, but you've got lower highs, and so boom, we're set up to take out on Friday afternoon some short covering, some counter trend, and that's one of the ways you do it